Right. Hey everyone, Sherman here. So today is the 29th of May. So basically just to check up what's going on with the chart. So everything is still progressing in the direction of the bias. So it came down, made a sideways. Then from here it started to go down, right? So 2 weeks ago we started to predict what it was going to do, and so far everything is pretty much on point. So basically, you just can't lose anymore, right? So it's really gone so far. So pound dollar probably next week will be very interesting to see if this goes up. But so far, everything's on point. So hopefully, it gets up there. So this the dollar CAD, euro dollar, pound dollar, these were two-week swings, right? So there's really no need to take so many trades, but just take trades in the direction of the bias, and it should be okay. Right. So someone asked what RSI I was using. Actually, the RSI I'm using is just basically you can see it's just the default. Okay, so the default. So here, I'll just show you this default. Default. Okay. That's it. Default. Then another question that came in was well, S&P, right? Okay, S&P. What are my thoughts on the S&P? Which way do I think it's going to go right now? So let's just take a look. Let's just take a look at this. Now this move down actually pretty strong. So if I was to look at this, what is going to happen is, okay, let me just scroll down slowly, scroll down to the okay. If you're a very long-term trader, basically what this is something in terms of swing trading is pretty incomplete because all you have is a current out move where this previous low was broken. You see that, the previous low. So whatever push this up, whatever buys here that pushed this up, somebody saw, hey, this is good price, let's buy it up. Whoever did that, price has come and taken this out. Now, when it takes these levels out, right? Again, it doesn't mean that this is going to end up there, right? Doesn't mean that it's going to end up at this price. Also, because this one could anyway could do something, and then just suddenly crawl and then just break the top, just like that, if it wants to. Suddenly we're just stuck with one sharp move down, right? Now, of course, this one, if it does something like that, it does like this, right? Then you're going to see people who trade moving averages. You're going to see the moving average going to be like that, and then this is going to crawl down. So when there's a time factor swing like that, swings that take a long time, and then suddenly you start to see it here, and then you start to sell it. Well, then that's a good trade right here. But you got to understand how long it's going to potentially. This kind of swings can potentially take a very long time. So you just look at stuff like that. You see, they take almost a year to play out. Almost a year. See, you draw it down here. 2015. See, they take almost an entire year to play out. So these swings, from a swing perspective, I would say at this point we are trading within this range basically. Okay, and actually Forex is sometimes the easy way to think about it is if you look at MACD, right? So if you look at MACD, you see this green to this red, then to this green. Okay, so basically this down here is represented by this top to this bottom. And when this one went up, well, whatever this is, this move is a move of its own. So you can say, if you think of Forex in a very simple way, then either this top will break or this bottom will break. Right? Like I usually, just a simple example, let's say like this one, you see this green and this red here. So hopefully this is helpful for you, Sintha. So let's say this one comes up here. So in this case, you broke the top. right? So let's say when this one came down here and then it closed, well, either the top will break or the bottom will break. So generally, if you're playing like you try to play a swing trade, you try to play. I do take note when the MACD closes, because if it closes, see when it closes somewhere here, sometimes it closes a bit too high already. So if you're lucky, right, you find one that is kind of friendly. Let me see if it's anything friendly. Like for example, over here. Sometimes it can be a little bit friendly. Sometimes they can be a little bit too late. So when this one closed up right here, you see that? So at that point, you can tell yourself, hey, you know what? Do I think that the S&P is going to break the top, or is it going to break the low? So one side will break, basically. One side will break. So either this is a 1, 2, 3 going down, or this is the correction, and then this is going up to break the top. So when we're actually trading, the hope, right? I would say the easier direction, of course, when this one looks like correction, the hope is that you can eat this down here. But unfortunately, this is also quite tough because this can always come back here, take out stops before it goes on again. That's what it does. So depending on the swings that is given to us, then we just have to act accordingly, basically. All right. So anyway, so where are we right now? So I'm just gonna put out some quick labels and then see where we are. Let me just go to month. Yeah, okay. It came down a week up, all right. So let's go a week. Yeah. See, it took out this level over here. So right now, if you're gonna trade this, right, I would just my thought would be to trade S&P on the fly, meaning that can I say that this is gonna break this top? Can I say this is gonna break this low? No, I can't. I can't say that. It could go just because this is strong. Yes, it's strong, but unfortunately, there are also, if you're going to consider a trading strategy that's not just for S&P but for all charts, then we have to know that this impulse, correction impulse does not always happen, unfortunately. So sometimes this is all, and then suddenly this just crawls up like that. So right now, I would say let's just go here and let's see what we have in there. Right, see what we have. So down, sideways. Definitely this thing's taking a long time. Let me just take that away. Okay, so I'm just marking out, let's see all these zones over here. Yeah. All these are zones over there. And notice that every push is respected, meaning that from here, it pushes and breaks the top. See that? It comes down here, it goes and breaks the top. It comes down here, it goes and breaks the top. It does not come back down to break this low, doesn't come back down to break this low. So generally when it acts like that, then it, you can say that structure is supporting this current move. It's a good thing. But could this anytime come down and smash it? It could also. It could also, unfortunately. So just have to wing it, right? Just have to wing it. So if I'm looking at this, I'm just not looking at the news. I'm just looking as it comes to this low over here. It comes to this low over here. See, it came down to this low over here. 3 wave. Maybe this one was a place you could buy. Like a 1, 2, 3. And then down here you try. And then of course you put your stop below, and then you see how far you could go. So that would have been a trade. That would have been a trade for the S&P. So this trade is very different from saying this. It's because you can't really say this may never happen. Although it looks like it, but if you just buy it here and it goes back to the top, then it will be stopped out for a lot of money. So you just have to wing it. So let me see. I would say anywhere around, around here is where you're supposed to take profit already. You can't keep it. Today is Friday. You're out of the market already, basically. So basically, if you traded this, right, you have gone in, you have got out there. And this would have made you feel sad a little bit because you see, it pulled back, it go out, it pulled back, and then finally it went. And then finally here is where we start to exit. I mean, there are many ways to actually exit this. Some people take it off at the 270, and the 414. There are many ways to hit targets. Okay, so right now I'll say the trade is done. The trade is done. We do have let me see, an easy trade, right, would look something like this. So now let's see the top over here. So basically what you hope for is basically you want price action to actually not go break this top, because then it will make trading easy. So what I would want for it to happen, I don't know if it's going to happen, is I want an easy setup like the one that I just said, like this, easy setup like here, and then you took that. So this is an easy setup, right? So what you hope for is you want this, this goes up, then there's nothing you can do. Because at any point when you try to enter, you might take a loss, you see. Because as it goes up, what you see is what you take, what you see is what you take. So whatever you risk is in the market is 1:1, right? It's 1:1. So now that it's gone up there, 1:1, meaning like if you risk this, hopefully like a little correction here. So if it pulls back, you'll be stopped out. Then you just take 1:1.5, just a little bit. That's it. You wait for a pullback, you go. You wait for a pullback, you go. Wait for a pullback, you go. But we're gonna say at some point this might just crash right through. So once you hit this target, I would suggest, for me, I'm not looking for the buy anymore here. Right? This one and this one was a good setup for the upside. But once you reach your target, and today is Friday, I just not go at the play anymore, basically. Okay. Anyone who plays is taking a risk. Taking a risk. Because all these places here are all dangerous. It could hit, and then after it starts, you might react, and then you don't really know what all these things are, all these little zones, see all these little kinks over there, right? So, what I will hope for is look next week. You have to wait for it to play out, like around 4 waves, maybe like a 1 wave down, and then 2, 3, and then here, and then here. So 1, 2, 3, 4. Then like a 5, a small one, and then you can try to go like this. And then this one is what you're trying to make. But again, are we saying that this move down is going to be that? No, you cannot say that as well, because a lot can happen. It might not. We will just trade on the fly. It's called, I don't know, maybe call it swing scalping or something. But we got to allow stuff to develop, and then we just trade accordingly, right? And this is on the talking about this on the 4 time frame. So you can imagine if you're actually trading a time packet swing on the S&P next week, you might end up even not taking any trades because all this takes time. And then by next week, it might look like that. It might look like that. People who traded, who entered early, entered, and then suddenly by Thursday, Friday, they got stopped out. And then the week after that is when this one actually went down. So I would say if waiting for time factor swing, you need to wait about a week plus, right? Because looking at this, right, to me, the move is already done. The move is already done. So if I was to trade S&P, I will wait until, I'll wait 2 weeks more. 2 weeks more. So today is 29th. So if you're looking for time factor swing on the 4 time frame, right, you're talking about May, June. Let me see. Yeah, around 9th June would be a time to look at this S&P. That's how I would trade it. Is wait for more swings, right? If in terms of a higher time frame swing, I would hope for this to go down, and then of course I would hope for setups that suggest a downside. If I'm looking for scalps, this is upside. And you're gonna know that if you start to go to a low time frame, then if you're willing to risk the low time frame, then it's gonna look like something like this. All right. But bear in mind that S&P, when it moves, it can really move. So you're gonna be cautious about that. So 2 hours, yeah. So you gotta wait for all these pullbacks. Let me see. So you have a move that looks like this. I'm gonna label it now. I'll call it. We call it A, B, and then a C here. Okay. Then I'm gonna put something like time frame is this. I'm gonna call this. Okay, I'm gonna call it that. No, wait a minute. Okay, I'll do that. Okay, and then I will do. I'll do that. Okay, now go down on 1 hour. A problem is this is quite sharp. This is quite sharp. This is quite sharp over there. This is quite sharp. I would not buy this. And I would put this as a question mark here, saying that is this done? Is this upside done? Is this upside down? Do I want to risk it? Do I want to risk? So you had this was your correction right there. You see the sideways over here. Correction here, came down. See a sharp, and this is interesting again. You see a learning moment, sharp move, strong move. But so if you thought that the impulse correction, impulse, immediately you see a strong move, right? So you're thinking, okay, you're thinking of sideways and then down, but sharp move and then it just went up to break the top again. So that can be a little bit frustrating. 1, 2, 3. Yeah. So if you're looking for the downside, I would say around the downside will be around here. So you gotta wait for this to really make some kind of, hopefully some kind of slow pullback that kind of slows down over here. Yeah. So that would come back to this zone where it was last, there's a push. And if this one kind of takes a long time, you hope that it does not do that. You just want it to be sideways. And then when it comes back down, you see all this moves up here and then it pushes up again. See, pushes up again. Yeah, so you hope for something simple, pushes up again, and then of course when you enter, your stop would be below, but not at the exact low here. You gotta give it some space to breathe, and then from here you're looking for it to go break this top over here. So there's a lot of waiting. There's a lot of waiting basically just for it to confirm that this is exactly what it's doing. It's take a long time, suddenly it slowly starts to go up, right? And if you don't do that, and you just, let's say for people who don't do that, they just do something like here from here, and then they just flip like this, right? And what the problem with this is, if it comes here, you may just take your order, and then it just plunges down, and then suddenly, guess what? You see it do that. So we entered here, we got stopped out there for minus $1,000, and then suddenly this happened. So it's better to take the breakouts because we are at a level that's actually pretty high. Where if we go back to the 4 hour, see, this move was pretty strong. You're going to be very wary of this move, and it's pretty high because the last push was over here at this level. So you want to buy this? I don't recommend it, but if you're itching for a trade, the current trend is up. All right, you got to take and go because why? You are encountering where the best from this level, you see from this level, it pushed it down. So to me, the sell will be the safer option, and it requires confirmation before we actually sell. And that means waiting at least 1 week. If we are time factor traders, time factor swing traders, that's what you need to do. Like a sniper, you wait till you just keep waiting until you find the opportune moment. I mean, sometimes you just don't trade at all, right? So that's what I think about S&P. That's my thoughts on it. So small time frame the small time frame would be for this to, one time frame was for this to slow down very slow, and then before you take any buys up. But even though on a small time frame, I might say that I'm looking for the buy, but on the higher time frame, I'm actually looking for the sell because of this zones over here. They're highly dangerous. Okay, so again, even though the bigger time frame, I'm thinking of sell. If on the lower time frame, I think you can buy. I will still take this. I will still buy it up before I sell it now. And I say that because, well, not to say that I'm that good, but unfortunately, or unfortunately, I wait boastfully on my charts. That's what I show as well, right? Even though I think a bias is a certain way, but it does not mean that I will not trade the opposite direction if I can. Because opposite direction is a correction. Like for example, over here, You see, even though I think this is a big move, does not mean that I will not trade that, because this is a B. So see, does not mean that I will not trade that before the big move. So before the big move happens, you can still go, you can still trade the opposite direction, but you got to know what you're doing and the risk that's involved with it. Right? Does not mean that it was going to go up from here, even though the bias was up. Right? So likewise, they're all the same. Even though I think that this is the bigger move, but it does not mean that you don't trade this, because here look for the sideways. So even though my bias is sell, the impulse is what we like, yes. But if you enter from here to get there, you're gonna be in trouble. The account will be in the loss when the sideways happen. So before we actually sell, look, there is a sideways first. This market stops people out that way. Someone must lose money, right? Unfortunately. So likewise, now if we go back to the S&P, even though I think the bias is down, it does not mean that you cannot take very little small trades to the upside. Although I don't recommend it. I prefer. I think it's a little bit tricky, right? It's a bit tricky. So coming back, we are now at this zones over here, and I would recommend that from here, maybe it pushes up a little bit more, stop people up before it plunges down. And the plunge can be a little bit tricky also. It can be the worst kind would be something that looks sideways like that. Like this, and then this one goes down. This is the worst kind because you can see it goes nowhere until it finally makes its move. So it's the worst kind of move in the opposite direction. So so the bias is one thing, and as I always said, bias is one thing, but intraday trading is also a separate skill. All right. So I hope that helps. S&P. Good luck.